Alright folks, so Dutch company ASML just dropped their Q2 2025 earnings, and the stock it pulled back by about 8 to 10% right after the report. Now, I've held ASML for a while. It's actually one of my favorite positions, and right now I'm down just about 2% on it. But even with the market reaction, I'm not only staying in, I'm still buying. Let me break down what happened, why the stock took a hit, and more importantly, why I'm not too worried about it long term. My name is Matthew and let's get straight into it. I personally own shares of ASML. It fits right into my overall investing approach. Quality, modes, and long-term potential. Simple as that. Now, if you follow any serious long-term investors, you've probably heard of Dave Kantesaria. He is one of my favorites, and he also holds ASML in his fund. His reasoning, basically, that every AI chip being built, whether it's for servers, phones, or self-driving cars, relies on machines made by ASML. That fundamental truth hasn't changed. Let's be clear. ASML isn't just some speculative tech play or small cap growth stock. This is a world-dominating, profit-generating beast with a monopoly on one of the most critical parts of semiconductor production. The tech is borderline science fiction, and no one else has been able to replicate it, not even with government-level resources like we've seen in China. Still, the market doesn't always reward great companies every quarter. Earnings reports are kind of coin flip. Sometimes great results send the stock up 10%, other times you get what we just saw. That's exactly why I don't play the quarterly earnings game. What really matters is the company's long-term journey. Now, when we talk about stock price moves, these are two forces at play. The fundamentals, things like revenue, margins, cash flow, the hard numbers. The narrative, basically the market's current mood or outlook on the company's future. And the second one, the narrative. It changes fast. Right now, it shifted a little more cautious, especially looking out into 2026. But does that change the fundamentals? Not really. Now, before we dive into the report, let me just say, as someone based in Europe, I'm genuinely proud of what ASML represents. This company has a truly unmatched technological edge. The precision, the complexity. It's one of those rare businesses that blends cutting-edge physics, engineering, and global economic influence. You really can't overstate how special it is. So let's look at the results. What actually happened? The company delivered great numbers. Q2 results. ASML reported earnings per share of €6.69. Analysts were expecting €5.94. That's about 30% year-over-year growth. That's no small bit. Gross margins also came in strong at 53.7%, ahead of expectations. Analysts had pegged it around 51.9%. Operating and other margins improved too, across the board. Their business model has two main revenue streams. First, selling the machines themselves, those huge lithography systems. Second, the services, installation, calibration, and ongoing field support. For this quarter, systems revenue hit €5.6 billion, slightly above the €5.58 billion estimate. Services brought in €2.1 million, again, above the €2 billion expected. So by all traditional metrics, revenue, earnings, margins, this was a beat. Orders are up too. Future orders, which often gets overlooked, were actually up big, from €3.9 billion last quarter to €5.5 billion. That's a 43% jump quarter over quarter. Analysts were only expecting €4.82 billion. To me, that says demand is alive and well, and the backlog's building. On the geographic side, Taiwan came in as the biggest customer, accounting for 35% of ASML's machine sales this quarter. China followed at 27%. And speaking of Taiwan, we've got to talk about TSMC, the world's most important chipmaker and one of ASML's biggest clients. TSMC earnings, indirect ASML's news. TSMC also just reported and crushed it. Q2 profits soared almost 61%, beating expectations, and they said demand for AI chips remains extremely strong. That's important, because TSMC growth is a tailwind for ASML. When TSMC ramps up production using newer nodes, they buy more ASML machines. It's a direct relationship. In fact, TSMC is planning to boost capital expenditures from $29.8 billion in 2024 to $38.4 billion in 2025, a major increase. That tells me they are investing heavily in future chip capabilities, especially around AI. Mass production of their next-gen 2-nanometer tech is expected to scale throughout 2025 and into 2026. That level of innovation only happens with ASML machines powering the process. So while this may look like a side note, it's actually a big vote of confidence for ASML's continued growth. Shareholders' moves. Another thing I appreciated, ASML continues to reward shareholders. In Q2 alone, they repurchased 2.3 million shares, and they are ramping up that pace. That's meaningful if you are holding long term. So far, everything is looking solid. Fundamentals are strong, demand is there, and a company is buying back stock. So what's the issue? Alright, so let's get into why ASML stock actually dropped after what looked like a solid earnings beat. Here is the real driver. Looking ahead to 2026, we believe AI-related demand is still on solid footing, but there's more uncertainty creeping in, mainly from macro and geopolitical factors. So while we're prepping for growth, we can't say for sure how it's all going to play out. That cautious language, especially the part about not being able to confirm growth, is what I think spooked the market. Let's break it down. ASML isn't saying growth is off the table. They're just saying, look, there are still question marks around tariffs, global trade policy, and the general macro backdrop heading into 2026. To me, that's a reasonable and responsible stance. They're managing expectations without trying to overpromise, and in this kind of environment, that's smart.
Going into 2026, there the fundamentals of our AI customer remain strong, and we are still preparing for growth. However, as we discussed last time, the level of uncertainty is increasing, mostly due to macroeconomic and geopolitics consideration. And that includes, of course, tariff.
We've got strong fundamentals from our AI customers, and we're ramping up for production, but the bigger picture still has some fog. And yes, all of that comes down to tariffs. So again, they are not backing away from growth. They are just signaling some caution around the global environment. If anything, I appreciate the transparency. That said, the rest of the earnings call gave us a lot to be encouraged by. They confirmed that the broader semiconductor industry is still booming, with AI pushing demand across tons of sectors. And looking ahead, the chip industry is on track to cross $1 trillion in annual revenue by 2030. That's a huge tailwind, and ASML's core technology sits right in the middle of that growth. They also talked about how AI's energy demands and rising costs are forcing chipmakers to innovate, and that's exactly where lithography becomes even more important. ASML's machines make those cutting-edge processes possible. The company expects more lithography steps in both logic and memory chips design going forward, and their product lineup from EUV to DUV to their new holistic lithography systems is built to meet that evolving demand. So yeah. When I zoom out, I see a company that's not just keeping up, it's defining the future of chip making. And here is the kicker. Based on a few different market scenarios, ASML still sees a path to hitting between 43 and 60 billion euros in revenue by 2030, with gross margins climbing into the 56 to 60% range. It's pretty bullish long-term outlook, and frankly, that's what I'm focused on as a long-term investor.
Then to finish up, Christoph, can you give us an overview again of where you see maybe more longer term the market and what that means for ASML and our business in the long term?
Yes, I think long term the semiconductor market remains very strong, and I think a lot of people say that AI is really a great opportunity, and we have seen again the fundamentals around AI to be very, very strong. Now, of course, short term, Roger talked about it, some uncertainty, there's a lot happening, discussion around tariff, export control, macroeconomic uncertainties, all of that is also part of the things we have to manage. As we discussed in the Capital Market Day, the shift of our customer towards more advanced logic, advanced memory, will also drive the need for more advanced lithography, and this will basically be a good thing for litho intensity. The progress we make on our EUV roadmap with low-NA, high-NA, providing the right cost of technology, will continue to allow us basically to convert more multi-patterning layer to single expose. And we will see that happening in the course of the next few years. So in terms of long-term forecast, we remain consistent with what we have said in our Capital Market Day. We see an opportunity for 2030 of a total revenue between 44 and 60 billion euro and a gross margin between 56 and 60%.
Let's shift gears for a minute and talk performance. Over the past 12 months, ASML is down about 21%. Meanwhile, the S&P 500 is up about 10%, and the Nasdaq has gained 12%. So yeah, ASML is clearly lagging that indexes lately. But zoom out to a 5-year view. ASML is up roughly 130%, which beats both the S&P and the Nasdaq. And over 10 years, ASML's return is over 820%. That's massive, easily outpacing the broader market. Just to compare within the semiconductor equipment space, ASML minus 21% over the past year, Applied Materials minus 18%, Lam Research minus 4%, KLA plus 10%, the only with a positive return. So yeah, ASML hasn't had a great year, but neither has most of the sector. It's been a tough stretch even for high quality names. Over long-term timeframes, ASML still delivers impressive returns, though some of its peers have had stronger relative runs in recent years. For me, ASML makes up about 7% of my portfolio right now, and unless something really fundamental changes with the business model or competitive edge, I don't plan on selling. In fact, if the stock dips below $670 again, I'll probably add more. That price would be hard to ignore. I see a company with massive long-term demand drivers, incredible pricing power, and a product that no one else on earth can really match. AI, high-performance computing, advanced logic chips, all of it funnels back to ASML. Yes, short-term uncertainty exists. Yes, tariffs could get worse. And yes, markets don't like cloudy guidance, but the long-term story still intact. And I personally think some of the tariff talk, especially with the upcoming US election, might be more of a negotiation tool than a permanent shift. Even Trump, from what I've seen, doesn't seem set on locking those tariffs in for the long haul. I'll be taking advantage of any weakness in the stock. So, ASML just reported strong earnings, margins were solid, orders were up, and long-term demand still looks powerful. The market dropped the stock because of slightly softer Q2 outlook and some uncertainty heading into 2026. But ASML is still planning for growth, just not guaranteed yet. They're being transparent, they're still innovating, and the AI boom, which they're essential to, is only gaining steam. So that's why I'm holding. Let me know in the comments if you are holding ASML right now, or if you are planning to buy more. And if you are curious about what's going on with the Russian economy and why it matters right now, check out this video right here. Thanks for watching and take care.